Hey guys, I'm your old Stock Market Series podcast. I'm super pumped today to share with you a really special interview I did with my buddy Jake. I've been training with him for such a long time. He was one of the original students, like long time ago when I was doing like local stock lectures and classes in my community. It was just like a really great experience, like one of the best times of my life, really helping people get in personal finance and investing for the first time ever, years and years ago, and really figuring out like what clicks and what doesn't click, and like how to actually teach people about investing. And he was like one of those original students. He took it and he applied and he started investing his lawnmower money and just made insane amounts of money in the market. And so I'm really excited to share with you a quick little interview with him. But one that really contained a lot of a lot of powerful principles and fundamentals and things that I wouldn't necessarily thought of coming from a very basic, like original perspective of not teaching this. And I think there's a lot of gold here. So definitely a really limited exclusive interview. And I hope you get a lot of value out of it. So with that said, I will cut over to the intro and let you guys right into it. Thanks. Bye.
So the big question is this: how do investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements, and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer.
Awesome. You pumped?
Heck yeah, it's always good to be with you, John.
So like, we've been trading together for like so long.
Yeah.
Which I think is kind of crazy. Do you want to talk about that?
Yeah, we've been trading 3 or 4 years now?
Yeah.
I would say so.
It's fun stuff, man.
It's great, yeah. I mean, it's good to get started young.
Yeah.
That's the number one thing. You've taught me a lot about how to, manage money, invest, all kinds of stuff, asset management. I think it's cool. Everybody should know, how to do it.
That's so cool, man.
Yeah.
So like, what I want to focus on is like education and growth, and then how you like can turn that into like an unlimited flow of like new investment ideas. Because I think sort of like once you learn how to get really good at investing, and then you're in a like relationship with someone who's really good at investing, it works so much better than just like one person. Because like 1 + 1 is like 3, which is like insanely cool. So do you want to like talk about like learning to invest?
Yeah, let's
find,
do
like,
it.
really good stocks.
Yeah, of course. Hey, I don't turn down talking about investing. You know that. So, yeah, let's talk about it.
That's so cool, man. So, like, do you spend a lot of time, like, screening for stocks?
I would say I have, screened for stocks because there's little things, like volume, different indicators that go into the screener to pick the right stocks. So you're not going in blind when you're trading.
Yeah.
You use key indicators so you can pick the best stock. And I think, yeah, you learn that as you trade. I have screeners on TD Ameritrade, and you, like you say, you set up maybe, you want a lot of volume when you trade. And if you see it on the screener, you pull it up. And then if you have a good setup, you just start trading it. And without a screener, you're kind of just, picking companies out of the sky, you don't really know.
Yeah.
So
That's cool.
I would say screeners are definitely important for trading, active trading, even long-term investing.
Yeah.
But you have to set up the screener differently for if you're going to do it short-term or long-term. So
Do you usually just look for growth and gains?
I would say, being young, yeah, you want some growth. I do a lot of long-term, also day trading.
Yeah.
I guess you can call that speculative trading.
That's what you fill out on the broker form.
Yeah. So you can get approved for all the options and stuff. But
yeah.
you definitely have to be aggressive when you're young. I guess you would consider that growth, right?
Yeah.
Yeah. I guess you also trade with that mindset, growth.
Yeah. 100%.
Yeah. We're aiming to get 10-20% instead of 4%.
Yeah.
Which is conservative. So I think it's really cool, learning how to use a screener. I didn't know how to use a screener 3 years ago,
Right.
and now I do. It doesn't take long.
That's so cool. I have a lot of people, and they're like, you should like robotize your screeners and like robo trade.
Uh-huh.
And it's just like crazy because like like it's so hard. So you can't just like look just at the screener, because when you're looking, at the screener, say you get like 10, 20, 30, 40 stocks to come up, like how many of those you actually trade?
Okay. Yeah. That's cool because I normally just look at the top 5 or 6.
Yeah.
I list them in order from top percent gainers.
Mm-hmm.
You probably do the same.
Exactly, yeah.
And then, you can pull up 3 or 4 at a time. Even though it might be up 100% or so, that doesn't mean you're always going to trade it. Because, I don't know, I always just look for something that has a lot of volatility. It could be up 100%, but just, stable throughout the day after that.
Yeah.
So,
I think the news affects it too. Like if it's an earnings report, it'll usually perform a lot more, not like it just won't really move that much.
yeah.
But if they get like a drug approved or something,
Yeah.
they'll just explode.
That's right. Well, with the screener, normally the price of the stock, I have it set under $10.
Okay.
Whereas if you have a stock that is like trading at $200 or $300, yeah, they might be up 7 or 8%, but they're not going to fluctuate as much.
Yeah, that's 100%. I mean, I set my screeners like 25, and
Okay.
even as you get closer to that, it still fluctuates less.
Yeah, exactly. I don't know how low you go. I think the lowest I've been, maybe $1.
$1.
Yeah.
The lowest I've been's like probably 20 cents.
20 cents, okay.
And then it goes to $1.
Okay,
which
yeah.
is good.
I'm telling you, I mean, you just make some big gains on these. But those are, I don't know, is it hard to get in and out of those? Because the bid-ask spread is probably big.
It's like 5%.
Okay.
You have to like look for the ones that are on the NASDAQ, not the pink sheets, because the pink sheets are so sketchy. But a lot of them trade on NASDAQ markets instead of OTC, so you can get good volume.
Okay. Yeah, because I know I traded an over-the-counter stock. What was it, Razor?
Razor, yeah.
It was RAZFF, and
because they're international.
It was international, and they charged me like $25.
That's crazy.
To trade that stock, and I was
Was that TD?
Yeah, that was through TD Ameritrade, and just international charge. I had no idea.
Yeah.
So it's a big commission, So I don't know is that common with over-the-counter stocks?
I don't think it is.
No. Okay.
Because it's like an American holding for a national company.
Okay.
So I remember, I think I bought, I remember when, Roar Cannabis, right?
Yeah.
So like 2 years ago when they were like $2 before they went up to like 12 or whatever,
Mm-hmm.
they didn't have ACB, which is what they are now, and they had ACBFF, just like Razor's like RAZFF.
Yeah.
And so it was the international holding. So I bought it through Fidelity, and it was like $30 for the charge to buy it for a Canadian stock.
Oh my God, that's a lot.
Yeah.
What was the price of the stock?
The stock was $2.
$2.
Yeah, about like couple hundred.
Yeah. That's crazy. I mean, I don't know how that works with the commissions. I guess it goes straight to the broker, or
It's weird.
when it's over the counter. I don't know how that works.
Yeah, I think, yeah.
But,
It's just a different market
yeah.
versus
But
international stuff.
would you say you use a scanner on a daily basis?
Dude, holy crap, like every single
Yeah,
day,
yeah.
yeah. How often do you use, like, besides, like, obviously the 9 to noon screeners, like,
Mhm.
how often do you use, like, long-term screeners?
I would say long-term screeners I don't use as much.
Mm-hmm.
I kind of know. I have a list of, like Yahoo Finance does a screen. They already have a screener for you.
It's really nice.
So you can go on there, undervalued stocks, maybe pull up a company or two, and then pull up their chart
Mm-hmm.
and, use stuff like RSI and stochastics to trade it. I don't know if you can necessarily put RSI in a screener.
Oh, dude, I've seen this cool one on, like, FinViz.
Okay.
And FinViz, they have screeners for, like, MACD crossovers.
Really?
And it's really interesting, yeah.
Yeah, and there's a lot of stuff you can put in on a screener, but I feel a lot better when I pull up a chart and actually see.
Because you have to see it.
Yeah, you have to see it. Yeah, you can see the numbers on the screener, but if you don't see the chart,
Yeah.
it's kind of like a confirmation. I want to trade this stock, and so
If you just have the computer,
yeah,
like, you don't actually know the full picture.
yeah.
You don't get what's going on until you look at the chart.
Exactly. Do you use a lot of so you have the screener? Would you say you're more technical analysis, right, or fundamental?
It depends, like, on the time frame.
Okay.
So, like with 9 to noon trading or, like, super short term stuff, where you're holding it for, like, 20 minutes on Shopify, like you don't care about the company,
Exactly.
I don't think I might have read Shopify's earnings report like 2 years ago.
Okay.
There's, like, nothing in that is pertinent at all to, like, just swing trading it on, like you were talking about with options, like buying the Friday calls or the Friday puts that expire on the same day on Friday. and then like you triple or quadruple your money based off of just like a technical setup or a VWAP crossover or a wedge.
Yeah, exactly. Like, so I've traded Shopify the past 2 weeks. I hardly even know what the company does. I just trade their options and make like 60% a day on them, just based off the charts and understand. You don't even have to understand. You understand options at not even that high of a level, and you can make 60%. That just proves you don't have to be all deep into like you said, the Greeks and stuff in your videos. Yeah. You just have to understand, what options are, and you can really crush it.
Yeah.
I mean, cool. I think if you know all the Greeks, you just get thrown off. You're not gonna make as much. You're gonna be worried about too many things. Just keep it simple.
Yeah.
And you'll make huge gains.
It's just price action.
Yeah, price action. But I don't have any. Is there any option screeners? I haven't really been into option screeners. I know they have them.
Oh, they do have?
Yeah, they have option screeners on TD Ameritrade.
Oh.
So it'd be worth, looking into that.
That's cool.
Yeah.
Yeah.
So, but yeah, screeners are great. I use them every day.
Yeah.
But you kind of have to know how to set up the screener.
Right, yeah. Yahoo Finance makes it good for the long-term stuff.
Yeah, top gainers, undervalued, all that.
Yeah. And you just look at, like, technicals.
Yep.
Exactly. For the option screeners, is it based off, like, the price of the options?
Yeah, like they have all the Greeks, but then, like I said, you don't need to know all that, so.
Okay.
I've never used option screeners.
I just, like, screen for the stock.
Okay.
And then you trade the options.
Yeah, exactly. Yeah. But they do have option screeners.
That's cool.
Be worth looking into.
For sure, yeah.
But, we don't need it. We're making 60% a trade.
Yeah.
Not doing it.
I have, like, some clients, and they literally, like, I have this one lady. She trades Amazon and Google. Like, those are the only 2 stocks she trades.
Yeah.
Every single day. And she's, like, making $60 a month. Absolutely crushing it. It's insane.
Oh, my God. Yeah, I think that's another thing. If you get a few stocks that you can make good gains on, just stick with them. There's no need to sit here and try to manage 20 companies a day.
Dude, that's so true.
Yeah, like, just stick with 2, because the more companies you have, the more research you need to do, and it's just, I don't know, I feel like with 2 or 3 companies, if you're doing good on them, just stick with them. Like, that's the same with Shop. I've traded options on them the past 2 weeks, and just Shop, and you can make 60% a day.
That's so cool.
Yeah.
I remember, I think it's different kind of when you're starting out, because, like, you don't know how to trade that well, and then, like, you kind of have to diversify so you don't lose your ass. Remember, like, a year ago, we were doing, like, all the stock pick stuff? That was, like, probably 50 companies, right?
Exactly.
In the span of, like, half a year.
Yeah.
And you totally, like, I lost track of that stuff because there's just so much to track. And so I think it's definitely critical to find, like, so right now I have, like, probably 10, like, swing trades for the next 4 or 5 months.
Mm-hmm.
And, like, half of them have doubled, and the other half are probably going to double. It's just over time.
Yeah.
And over the past 6 months, like, in the past, I've gone, like, 218% on the swing trades just with, like, 6 stocks. So I think that's a big thing. Like, once you know what you're doing, you can sort of focus more on just a couple of investments that are going to do really, really well.
Yeah. I mean, when we did the stock picks, we had to worry about the fundamentals and the technicals. You have to look more at the 10Ks and all that kind of stuff. That takes a lot of time.
Mm-hmm.
With your swing trades, you probably use more technical analysis.
Yeah.
Where you just look at charts. You don't have to read through pages of stuff.
Yeah, it's not like what most people on Wall Street are doing.
Yeah. So, I don't know. The stock picks are good, but, we had to write it. We had to put it on paper, and it all just takes time.
Yeah.
And we probably didn't understand what every company did.
Exactly. That's a good point.
Yeah. So, but, stock picks are great.
That's cool, Jay. I know, like, a bunch of those. Well, not a bunch of them, but, like, some of them.
Mm-hmm.
Probably most of the most successful ones. Like, Campbell Soup is so cool.
Oh, yeah.
Like, a lot of it comes from, like, talking with each other, right? So, like, you learn how to get really, really great at investing. And then, like, something, I don't know if you realize this, but I thought it was insane. I thought it was super, super crazy valuable. Is, like, you would just start sending me, like, once a week, you'd send me, like, a ticker. And it was, like, crazy because they'd be, like, super highly qualified stocks. And then, like, I'd be like, hey, dude, that's awesome. We should invest in it. And then it would, like, do insanely well. Do you want to talk about, like, that process and going back and forth, like, sending back and forth stocks to each other?
Yeah, like 1 + 1 is better than just 1. Yeah, let's do it. Because, I think it's definitely, we've shown that, you can make bigger gains when you have people communicating, when you have two really good traders that know what they're doing.
Yeah.
So, yeah.
So, like, people are starting out. Do you think it would be critical for them to, like, find somebody else to invest with and then have that growth together?
Yeah, I think it's good to trade with friends like me and you. We've done it. But that person also needs to be, they need to know what they're doing.
Mm-hmm.
You don't want to have someone that doesn't know what they're doing, you lose your ass,
Oh, yeah, because they send you crap.
Yeah, you have to be, I would say, like when we did the stock classes,
Mm-hmm.
we were learning from each other.
Yeah.
So start off there, and then you start trading together. Don't just start trading together without any education in the
That's smart.
stock market. So, but yeah, I think it's really helped. I remember, we would send stock back and forth, and make a decision. Some things I don't see, you might see.
Right.
We're covering more ground, more stocks we can
Yeah,
scan
more
through.
eyes.
I think that's the biggest thing.
Yeah. Like, I don't know about you, but I'll probably look through, at least for longer term, like with 9-inning trades and like active trades,
Mm-hmm.
it's pretty easy. Like, if you want to trade Shopify, you just trade Shopify. If you want to trade pre-market gainers, you pick out like the top 20% of the stocks on the screener, and then you trade those, and you do like if like today there's like, I don't know, 10 or 15 stocks,
Mm-hmm.
and I traded 3 of them just because I couldn't actually trade anymore because of the PDT rule. So, like, you just trade a small percentage of those. But with longer term stuff, like, I'll look at like 100 of companies before I find one I'm going to invest in. Is that the same for you?
Yeah, I think definitely do your research. There's plenty of companies out there that might look like they're good to invest in, but if you can make 100% on one or 200 on the other, yeah, you're going to take the one with 200% that you think you can gain. It just depends on how much time you have also on your hands to do the research. I know a lot of kids, they're in school and they don't have time to do that, so you don't want to sit there and have 10, 20 stocks you're managing if you don't have the time.
Right.
If you're going to have a lot of stocks, you need to have the time to manage it.
Mm-hmm.
Or go active trading,
Yeah.
where you're in and out.
It's a lot easier. You don't have to hold it overnight.
Yeah, exactly. But, be willing to lose everything, I think. You got to be risky at our age.
Yeah.
What was it? The compound interest calculator?
Yeah.
I think that's one of the greatest things you ever showed me.
That's so cool, man.
We learned that back in stock class. Just plugging in numbers. Like, anybody can be a millionaire.
Yeah.
If you work at McDonald's, minimum wage, you can be a millionaire.
It's pretty crazy.
It's very crazy, yeah. You can have the same as a doctor would, because it's all about the time.
Mm-hmm.
You don't go to college, you have more time to invest.
Mm-hmm.
You have the same in the end as a doctor. They're spending, 8 years in college.
Dude, it's crazy.
So, I would just say, get out there and invest. Learn about it while you're young.
That makes sense.
Yeah. So, we got started, when we were, 13? You got started when you were 10, probably.
I don't think it was that far back,
Yeah.
but I don't know, maybe 15, 16.
Yeah. I don't know, what kind of, I don't know if you mind, but, how did you get into the investing?
Oh, yeah. Dude, you remember I was working at Subway?
Yeah?
Yeah. Did I never tell you this?
Yeah, was it any of your parents that influenced you, or was it just...
Well, my mom's a lawyer.
Okay.
And my dad, he, sells bonds.
Mm-hmm.
And so, they have investments because they're, super smart and they, know it's important to invest. But they just have it in, indices, which is, cool. But, yeah, they weren't really doing, any management. They had, financial advisors. And the financial advisors were getting, 5% a year. And I was like, holy crap, that's really bad. But no, so I was at Subway for, I don't know, probably 8 months. And it was awesome. You get your first job and you're doing all your stuff and you're absolutely crushing. You're pounding, and you're learning and you grow and you grow and you grow. But the challenge was my boss he was kind of a harsh guy. He was pretty mean, and at the time he was letting me work over the legal limit, which is pretty sweet. But all my coworkers just hated him, and so they started leaving, and just all quit. And it was insane because it got to the point where I'd work open to close, completely alone on the weekends. Mm-hmm. And that was sort of the turning point where I realized I didn't really want to work for somebody. I mean, we're talking about stuff like college and careers and stuff. And it's like when you work for other people, like, yeah, you know, it's a good place to start. It's a really powerful place to start, and that's where most people start. But for me, like, I think the goal is like freedom and having control of your financial future, where you're not, you know, scared or relying on other people. And you can also have an abundance without having to put in like 14 hours, 15 hours, 16 hours of work, hard work. People, I mean, dude, you look at like construction workers. Like, I have a cousin that's a construction worker. Like, he works so freaking hard, and he gets like, you know, what, $40 a day or something for that, or I don't know. It's harsh because you have people that are working super, super, super hard, but they're not getting like the results they want, because you can't go to the bank and deposit hard work.
Yeah.
Like, if they just don't care. The person who walks in with a briefcase from like trading stocks that has like 6, 7, 8 figures, and the person who walks in with his paycheck from, you know, whatever, like, they'll deposit the same. They don't care.
Yeah.
And so I think like one of the big parts of shifting away from like an employment mindset to like a results mindset with getting stock trades in, was like actually creating those results on your own terms and having the ability to scale your income and scale your growth. And so that was kind of like the motivating thing for me, to spend like all my time outside of work and outside of school for like half a year just learning about investing. Mostly just because there's like a lot of crap out there that's like bad information.
Yeah.
And so once you have the right information, like once I cracked sort of the 9 to noon formula, like how to do it really, really well, like all I want to do is share with people. Because when you share with people, like, and you give and you give and you give, like I gave all those classes away, just those seminars, and you had like, I don't know, 50 kids there for free, and like you just want to give to those people and then attract the people that are going to stay. Because when you give and give and give, like that comes back in terms of like people giving you highly, highly, highly qualified investments that they've been personally reviewing for maybe like for dozens of hours. And then instead of having to spend like 40 hours a week looking at stocks, you can just trade whenever you want, 9 to noon. And then like once a month, you spend like an hour or two reviewing sort of what your network of peers has shared with you and what some of the best investments are. And then you just spend I'll spend probably an hour or two a month for my swing trades, or maybe 10 minutes a day. And I mean, I outperform like every Wall Street manager. Because you're able to have that outside input.
Exactly. Yeah. Like, I mean, I think everyone should, you know, I think it was working at Subway was beneficial to you.
Yeah.
You have to start somewhere.
I think, yeah.
You have to have the cash to start investing. You can't just grow it on trees outside, you know.
Yeah.
You have to have it, which is, you know, hard for some people. So you get that first job and you earn your money.
You save.
And then you invest it. And then, you know, it's just a good starting point. You know, I started out mowing the yard, you know.
Dude, you're mowing lawns.
Yeah, mowing lawns, making money like you were, and that's kind of working for yourself. And then I would start investing it, you know, watching that grow. And it just feels great, you know, when you can watch your money grow. Whereas if you just, you know, I see people all the time spending it on just crazy stuff. Like jewels and all this kind of stuff nowadays people are spending it on. Like,
it's crazy.
It's crazy. Like, just invest it. Is that something you really need? No. So, you know, I think it's been great, you know, having the landscaping business the past few years. You got to have cash, like I said, and I'm grateful to have it. I know a lot of people don't, and that if you don't have it, you can't invest. So.
Right.
Yeah.
That's smart.
Yeah. So, but yeah, stock market's been good, dude. You know it.
Yeah, it's been insanely good.
Yeah.
I'm so like, I mean, the inverted yield curve came, so we'll see.
Yeah.
See how it goes.
That's why you can do active trading now.
Yeah.
Don't have much exposure long, and if it tanks, you're good.
Yeah, exactly. Because everything's just on a day by day.
Yeah. If it does tank, that's when you unload.
Or buy puts.
Yeah. Buy puts, or like when it tanks, put everything you got in the stock market.
Yeah.
That's what.
Or if you're at the top, because you look at like all the crashes, like over time, all the recessions.
Yeah.
The recessions, you know, they're like 1 or 2 years. But the change is like the change that it would have taken in like 8 years of like a bull market.
Yeah.
So if you like short, you buy puts, you can make like the same amount that you would make in 8 years in like a couple of months.
Yeah. Yeah.
So it's an insanely great opportunity. All you have to do is like know to short.
Yeah. Would you say, all right, so people that are in their 50s now, getting ready to retire,
Yeah.
a lot of exposure. What would you say to them now?
Oh,
Since we're at a
smart.
kind of a really all-time high.
Yeah. Yeah, I've got like family and cousins and parents and stuff.
Yeah.
And so they're like right around that place.
Mm-hmm.
So for them they're like this insane insurance product called the fixed index annuity. And basically what it does is you get like 90% of the market upside based on the S&P 500. And then you get 0% of the downside. And so it's just kind of like an annuity. You give them your money, and then your money grows based off of the market, but you can't lose money. So that's sort of probably the best sort of like guaranteed safe investment. The only risk is like an insurance risk, which is pretty minimal.
Okay, so if someone was just exposed to like, just equities, you would tell them to move their money out. Don't stay.
Oh, yeah. Dude,
yeah.
I sold all my equity stuff.
Okay, long term, yeah. Go to bonds or whatever, like, because we're at age now where we don't have really any exposure much to the market, whereas these people with millions of dollars getting ready to retire, if it crashes, they're screwed.
Well, that's why it's smart to get insurance. So, like, fixed index annuities are like a form of insurance. Gold's been going. Gold's been going hard.
Yeah.
Because gold, it's usually during the market crashes that it rallies.
Yeah.
I think we've still got, a little more time. But
Yeah. What, 30,000 next on the Dow?
Yeah.
We'll
so? See.
Yeah. Maybe. People have been saying, all along, we're at the top, and it just keeps on going.
Yeah, that's the one thing about it, too. Like, until you have something like an inverted yield curve, or until you have, like, really stone cold evidence of why the housing market is super screwed up. Like, everyone's constantly saying the market's going to crash, the world's going to end, stocks are dangerous, crap like that.
Mm-hmm.
What was some of the stuff you heard when you started? Like, I know I heard stuff like, you can't beat the market, or robots are trading 90% of stocks. There's no way you can beat them. Did you hear anything like that?
Yeah, especially when you're day trading. You hear a lot of people say, the computers are going to beat you every time. And that's just not true. And, I hear a lot. They're like, the biggest thing I hear is, it's like gambling. You're just throwing your money out the window. I hear it all the time. It's like going to Vegas, playing blackjack. You're just throwing it out the window. And, these are people that don't even trade stocks. And it's just it's not true. But I'd say that's the biggest thing is gambling.
Yeah.
What's your thought?
Ooh. I mean, if you can win, 80% of the time or more,
Mm-hmm.
or even if you can win just 50% of the time, but every time you win, you make like 5 times more than you risk. You make 3 times more than you risk. Like it's like your account just keeps going up more and more and more and more and more. Like once you have the right strategies.
Yeah.
And I mean, obviously there's dips, but in the long term, it just keeps going up. And so like, how can you call that gambling if you just keep succeeding? And I guess I think that comes down to education, because most people don't understand that like you can risk $1 and make 3, and those are the only investments you should make.
Yeah.
Most people are risking $1 to make like 50 cents, and that's why they get screwed over.
Yeah.
So it's I've heard that a lot. You remember like lotto calls, lotto options?
Yeah.
I think that's probably the closest thing to gambling, where you buy like super, super far out of the money puts or calls.
Uh-huh.
But even then, like if you know what you're doing in technical analysis,
Yeah, you can profit on it.
you can make like 8x returns.
Exactly. And I mean, yeah, you can be risky at our age. Like you said, trading like options on expiration day.
Oh yeah.
If you know a good setup, you get in them. Maybe you risk a couple $100, but your upside's thousands of dollars.
Yeah.
Like, it's just insane.
And you don't have to get 100% of your trades correct. You don't have to get 3 or 4 or 5 right, and you're crushing it.
Exactly. Yeah, you make 60% on a trade, and then one day you lose 10%. And that's a big thing, knowing stop losses and stuff like that.
Oh, yeah, that's huge.
That's all stuff you have to learn, though. Like, if you don't know that, it might be you might throw a lot of money out the window.
It's kind of like walking into a casino and then sitting down to play blackjack, except you don't know how to play blackjack. I think that's sort of the way a lot of people approach it. And that's why they have, like, money managers. Money managers are, like, people looking over their shoulder and telling them what to do.
And then they get screwed over because they don't know how to play the game. And then you have those people that like study the game, they study the method, they study how to succeed, and it doesn't take that long to get good at like blackjack or poker or whatever. But they learn how to like count cards, like counting cards.
Yeah.
So I don't know, maybe that takes like a week or two to learn.
Mm-hmm.
So they learn how to count the cards. They go in and they start counting the cards, and they like double their money, and then they double their money again, and they make tons and tons of money. And when you do that in a casino, what happens? You get kicked out.
Yeah, you get caught.
Because you count on the cards, and they'll kick you out. What's interesting, though, is in the stock market, you can do the exact same thing, but they can't kick you out of the casino. They can't kick you out of the stock market once you know what the hell you're doing. And you can just keep making that money over and over and over again. And so I think that's kind of the difference, is once you learn how to really become the house and act as if you were the house, so that you're the person that's statistically proven to make more money and make it over time. Like that's sort of how you win, I think.
Yeah, I'm glad you said that. It's there's so many resources out there, to learn how the market works.
Yeah.
And your book has been definitely helpful. I would suggest everybody to go read that.
Just good shit.
Yeah. Don't go in blind, And it just actually trading is a good experience. You're going to lose money in the beginning.
That's
You
huge.
lost a lot.
Oh, yeah.
Yeah.
I didn't know what I was doing at the beginning, dude.
Yeah. Like, you have the paper trading and all that, but I've never really done that.
The same, yeah.
They give you like $1 million to start trading paper. What? And then you go buy a $500,000 position, and you might look at it for 5 minutes. Like, that's just not.
It's just not real.
That's not real.
And what's crazy is like you'd have $1 million position and not give a shit about it with paper trading and have no emotional connection. But if you put like I have this guy, he's my step brother. He put like $12 into Snapchat stock, and every single day he's checking the stock, and he can't get his eyes off it, because even though it's such a teeny little amount of money, to him, like, that's the world. And I know, remember when like you made your first investment?
Yeah.
Like, how often were you looking at the Yahoo Finance app after that?
I would say every class period. I was
Yeah,
looking at
it was
it.
like...
And my first investment wasn't a good one. It was a company. Actually, the reason I invested in it was I just looked up online best stock to trade. That's what I did. I went on there, and it came up with like 5 stocks, and I just bought one of them. No research or anything, just bought it. And
just jumped in.
Yeah, just jumped in, and when you have your hard-earned money in there, yeah, you're gonna check the app every day. And then, like I said, last year I was in some trading game with paper money.
Mm-hmm.
They would give you millions, and you would just throw it in, crazy stuff, and you would never even look at it. So
there's got to be something on the line.
Yeah, don't be afraid to make your first trade and look at it. Yeah, I think you got to be aware of what you have.
That's so smart.
So, but I don't even know. It's Vox. That's the first company I ever bought.
Oh, Vox.
And I don't know anything about them.
Yeah.
So.
But it's good because, like, you learn so much by just making that first investment and getting in. I mean, half the battle's opening a brokerage account.
Oh, yeah, it definitely is. You have to, I mean, it's not too hard, but yeah, once you have to understand, like, there's so many brokers out there.
Yeah.
Kind of picking what you want.
I think we're lucky because a lot of people, they don't live in the States. And for a lot of international investors, like, some people, dude, there are, like, billions of people on this planet that don't even have bank accounts.
Yeah.
And so there's, like, no chance in hell that they're going to open up, like, any kind of investment account. I think just, like, having that opportunity to, like, put in your name, your phone number, your address, social security number, and then push, like, open account. Like, I think that's, like, a game changer. It's really, really, like, an amazing position to be in. Yeah,
if you do have that opportunity and you don't do it, you're just passing up on tons of money.
And half of Americans don't do it.
I mean, it's crazy. You have all these people that can't do it, that would want to do it, and yet all the people that are in America that could do it, they just don't care.
Yeah.
So I think, if you're one of those that do have the opportunity to do it, definitely do it. It's just like a bank account. Even if you don't trade, have you a brokerage account?
Yeah, it's the same thing.
Yeah. So, and once you're educated in it, start making your trades, and I would say what percent of people then invest, like, and they're educated in it. What I would say, majority of them, they do well in it.
Yeah, I mean, because most people fail without education, but then
Yeah.
once you get the education, it's like so much easier.
Yeah, yeah,
And it's so cool, like the internet, like you can get it at like it's right there.
yeah. Would you say that you are still learning new things about the stock market every day?
Yeah, through experience, through
Yeah.
trading.
Yeah, yeah. Especially, I mean, I trade options and regular stocks, but as far as like the investing in cryptocurrency, you know
Yeah.
more about that than I do.
Yeah,
But there's definitely
dude, I had this position went from 10 to the negative eighth pennies to like 0.0004. It was
Holy
it's
cow.
insane.
that is insane.
Crypto's a different game, man.
Yeah, yeah,
Do you want to talk about your transition from stocks to options?
yeah. Let's do it.
Hell yeah.
I think it's great. Yeah, so let's do it.
So you told me your bank account or your what with TD, right?
Brokerage account.
How
yeah.
was it growing for options?
You know, so I had those pretty bad positions at first I would do, but then we would go in some long positions and, you know, it would grow, 5, 7, 10% a year. And just steady increase. And then I started trading options a few months ago. And all of a sudden, I was making like 60% a day. And I looked at like the chart that shows your at price of your account, how much is in there, and it was just going, you know, steady increase, and it all of a sudden just straight up the line for a solid like 3 months.
That's
And
crazy cool.
the amount of time I spent doing those, like I would trade one stock, spend 30 minutes on it a day. Whereas those other ones, I've been in them for years.
Yeah.
So
And that's just a difference in education.
yeah. I mean, I think, yeah, if you can do both, you're making double, you know.
Yeah.
Yeah, options, it's a different game. I never knew much about them. I always would hear about them, and, you know.
Yeah, man. I spent years just doing stocks before I got into options at all.
Yeah, it's a different game. You have to. It's a lot of leverage.
Yeah. I mean, you have to like get really good at stocks.
Yeah, if you understand, it's what a lot of. I would say when I trade options, I use only technical analysis, but I trade really close to expiration. Like
It's
I
a
said,
good strategy. Yeah.
yeah. So, but you use everything you learn from stocks in options. Probably the same with, I don't know, what is it, Forex and all that.
With crypto,
Or crypto, yeah.
Forex is like super, super slow, but
Yeah.
crypto's insane.
Yeah.
It's a little bit. I think the markets, at least after the crash, I don't know. There's some really amazing opportunities. It's a little more speculative. It depends on if you're doing like the investing or the mining. So I have like all those computers I mine with, and that's like basically like real estate income, sort of, kind of.
Yeah.
And then with the investing's where all the money is, though. Like 80% of my money in crypto just comes from trading it, swing trading it. So you just do like 8-month swing trades just like you would. Mostly it's just a bunch of ABCD setups. Like I'm not even gonna lie, and they're so good.
Yeah.
Because you'll have an ABCD setup, and I had these positions in like Stellar Lumen, these positions in Verge, and they would go up like 3,000% a day.
Wow.
And over the course of a month, you would like 100x your position.
So you kind of do use the technical stuff you learn for stocks in crypto.
Yeah, basically crypto is like probably 80% technical.
Okay.
Even for the long-term investments.
80% technical.
Yeah.
Okay.
Maybe not. I mean, yeah. I mean, you have to know the fundamentals a little bit. And I've done a whole lot of research on like a lot of cryptocurrencies. But all that research has been great, and I think it's really helpful for a lot of the companies I run. But for like just from a standpoint of making money in the markets for crypto, like I probably had like, I don't know, 30 or 40 trades that have been out of this park, like out of the world, like 10x, 20x, 50x, 100x trades, where you trade like a couple $100 into like tens of thousands. And with those trades, it's like all technicals.
Yeah.
And a little bit of luck. I mean, you know, I've invested in like 200 to 300, and you just have to weigh your money accordingly. Like I have probably, 60% of my money in like 20% of the 20% of the coins, and so I just put most of my money in the ones that I'm like think are gonna do insanely well just based off technicals. And then you have like other side investments, like remember Carvana? We day traded them, or I day traded them a long time ago, and I lost like 10% on the day trade, and I decided to just hold it for the long term, and it went from like $10-$15 to like 90 over like a year or two. So it's stuff like that where, especially with crypto, it's a little bit riskier. Like diversification is a little bit more important. and you just invest in random crap, and it explodes. But a lot of the stuff, most of the stuff does well. Like SHND, like those positions, the one I was talking about at least, that went up like, I don't know, I think that was like 100 or 400x. Like, that was, like, I knew what that was going into it. So I think the research pays. It's really interesting because you can spend like 5 hours on research, which is a lot of time. And then that can be worth like 6 figures. But it's over the course of like you have to like just sit there and wait. Like, you put all the effort in, like, and then you buy the position. And for me, like, I've had that position for like 8 months. And I just wait. And now it's worth an insane amount of money to me.
Yeah.
But all the effort goes in at the beginning. So
you have to be willing to, do some research.
Yeah.
It's not just going to come if you trade a stock. Everyone's, I want to trade stocks. And then the first question they ask is, how much money do you have in it? And it's just,
dude, yeah.
I think it's just so easy. It's not, if you have to be educated, you have to put in the work.
Yeah.
It's not just free. It doesn't just come. It's not like with the casino in Vegas. Yeah, you can do it. You don't really. There's no education to be done. You can count the cards, but
yeah,
it's luck.
Exactly.
Yeah,
because the house favored.
Yeah, exactly. Stock market. You do your research. The gains are gonna come, and if you do lose, don't get down and out about it. Just keep investing.
Yeah, because you want to make, like, when you lose, it should be in a way that, like, historically and in the future will work out if you keep doing it over and over again.
Yeah.
Because if you have a setup that fails, you should still make sure you're actually trading a setup.
Yeah.
And most people analyze, like, their losses, and I think it's really important too, because I remember, like, some of my first losing stocks were some of my best learning moments. So you definitely want to, like, learn a whole lot when you have any kind of loss or something. But another really important thing I don't think a lot of people do is learning from their winners, because a lot of times I'll have, like, a winning position and I'll make, like, 40% on a day trade. But I could have had another 30%. So you obviously don't want to be, like, insanely greedy, because pigs get slaughtered, right?
Yeah, exactly.
But, like, try to, like, look back at your trades, not just your losers, also your winners, and figure out how you could do those better.
Yeah, that's what I do. So, you trade, 9 to noon, and then you spend maybe an hour, just looking at the charts and what you did. I remember calling you a lot of times and asking you about setups, and we would go over it and talk about the wedges and all that, why it worked, why maybe it failed, and then you go back the next week and you trade, and you can kind of see it as it plays out, why you failed. So
you just constantly get better when you're, like, working with people in the same mindset.
Yeah. Which is, if you don't have two, that's the good thing about, like you said, having two people that know about trading when they work together. Being able to call someone and ask them, a question is priceless,
Yeah.
And, I think it's really helped out, that we've been able to do that over the past few years. Because, sometimes you just need help, to ask someone.
Yeah, that's so true. I'd have, like, a position. I'd be about to buy the stock. I'd be like, Jake, what do you think about this stock?
Yeah. And you can sit down together and look at it. Somebody might not see something, another one will. And then you just call off the trade.
Yeah.
And then the next week it's down 20%, and you're glad you didn't get in,
Yeah.
So I remember doing that a lot in high school. Heck, in the halls we would look at stocks in the bathroom there, calling them out.
Yeah, man.
People think you're crazy, but
you're making more money than they're gonna make after they graduate.
Yep. That's definitely true. I've noticed, a lot more in college now. People are starting to notice, let's start investing. It's worth it.
That's smart. That's good.
Be willing to teach other people too. That's the good thing. Don't get big-headed about it. And feel like, be willing to work with other people.
Yeah, I think, like, you get better when you teach other people, because it's one of, like, the deepest levels of learning.
Yeah, exactly. So
I learned so much writing 9 to noon, and it's, like, weird because I thought I knew that shit.
Yeah.
But, like, you realize how much you don't know when you try to teach it.
Yeah.
So, yeah, it's huge.
And then having the Ethernet cable.
Little companies.
Little companies, and working with people of all different talents and stuff.
Yeah.
Just.
That's like business assets right there, man.
Yeah. That was a good time.
Yeah.
What, we get there at 7 a.m.? Put some Ethernet cables together.
Yeah, man. We, like, break into the library, or
Yeah.
the tech lab or whatever.
At the tech lab, every morning we'd have, 4 or 5, 6 kids come in.
Yeah, they just make Ethernet cables.
It's like a factory in there.
Like a little sweatshop.
Yeah. So, I think you should be willing. Try everything, Things are going to fail, but like you said, try it all. Something will hit.
Yeah, man.
Yeah. So, having the Ethernet, it's just really tough, that business. But we tried it.
We tried it, yeah. Low margin.
Yeah. So, it's been a good time.
Yeah, it was fun.
Yeah.
That's so cool, Jake.
Yeah.
When you look at, your long-term portfolio, are you focused, you talk about, compound interest calculators, which are insane. And the percentages you can get from that are obviously, like if you're looking at historical market performance, that's just, indices and stuff.
Yep.
But when you look at, your long-term growth, you just make so much more when you actively manage your investments to any extent whatsoever. Do you, how do you focus on long-term growth?
Long-term growth, like you said, there's a lot of different things you can do, like Roths and stuff.
Yeah.
I think you should definitely have both.
Yeah, both.
Yeah, I started with the long-term.
Yeah,
So,
me too.
Retirement,
Mm-hmm.
and stuff like that. That's where you're going to make the 7 to 10% guaranteed almost,
Yeah.
And then for long-term, I have a lot of dividend stocks, which I think is great,
Yeah, you got a lot of utilities.
Yeah, utilities, 4%, they pay out, which is good. I reinvest them. I would definitely recommend that, at a young age. That's the biggest thing, just reinvesting all your dividends. A lot of people would say don't have dividend stocks because, it's just too conservative, but it's just good. I think it's good to have both,
It's like long-term growth, yeah.
Yeah, that's for long-term growth, I love dividend stocks.
Yeah.
I would
It's
say
smart.
that's my biggest thing, yeah. And it's a safe investment, utilities. Whereas if the market does go south, you have some things there to cover you,
Yeah, they'll do well,
Yeah,
hopefully.
yeah, hopefully. So,
Some of them are crazy, dude. They got 10% dividends.
yeah, I normally stick with under 6%,
That's smart.
I would say.
That's really good. That's like a bond.
Yeah.
But then it's obviously the stock risk. So.
Yeah, you have the stock risk.
But long term, it's not as risky.
No. I think the total shareholder return on that utility, I have a lot of utilities, it's around 10% this year. So that's decent, that's the market
really
right
good.
there.
Yeah.
So
It's a great year for a lot of people.
yeah.
So you have half your money in long term investments that you don't really touch at all or worry about, and then you actively do the other half.
I would say, okay, so yeah, I have a lot of long term. Not gonna touch it, reinvested dividend. I would say probably it used to be more, probably 75% long. Now it's kind of 50-50. Given that, we're on break now, you can trade a lot more actively with the money. Kind of transitioning a lot of those long terms into cash. Sit on a little bit of cash.
That's
which
smart.
I recommend in a market
Yeah.
this high.
It's really high, yeah.
So yeah, I would say 50-50. And don't be if you have cash sitting in your account, oh well, it's not the end of the world. You don't have to have everything invested.
That's right. Yeah. You can make money for sure, but you can also, if you just leave it in something blindly and you lose 10%, it's worse to lose money than to have it, in a 2 or 3%, or I don't know, you can get 2% bank accounts today.
Yeah. I think, you have to have a bank account. That was one big thing when I started trading. You can't just put money in a brokerage account, I don't think.
Yeah.
You have to transfer it from the bank account over. So it was a process, getting everything running good. Being 18 years old, you have to be that, So.
Dude, I wish I knew about those youth accounts 4 years ago.
Yeah.
Ah, man.
UTMAs?
Yeah, and the UTMAs.
Yeah, that's weird. So I had a UTMA, and
Oh, you did?
I thought the maturity age was 18.
Uh-huh.
So on my 18th birthday a couple months ago, we called TD and we were like, yeah, transfer this from this parent's name to my name.
Yeah.
And they're like, no, you can't do that. The maturity age in North Carolina is 21
Oh, shit.
for a UTMA,
Wow.
which is crazy. So, we had to stop the UTMA, transfer all the funds to a different account and all, but there's just so many different things, going on with all these accounts.
The regulations is crazy.
Yeah. So we got all that resolved, but that's 21, the maturity age. Just wild, isn't it?
Yeah, it's crazy.
That tells you what they think about, kids.
Kids.
Yeah.
Dude, if you if you go to I think it's the Investopedia page for UGMA UTMA account, and they have like this little video for it. And in the video, the person that they have depicted as the kid is like this guy in this like red Ferrari with a bunch of women around him, and is talking about how you might not want to immediately transfer money to your youth.
Yeah.
And it's crazy because like most people have like no money management skills because like they just aren't forced to do it until they're like actually there in the job market. They're actually like right on the edge of like not having an apartment, not being able to make rent, and that's the worst time possible to ever even consider investing because you don't have like cash flow.
Yeah.
And so just starting early.
Get ahead of the game for sure. When you're young, you don't spend as much money before you have kids. And then when you do have kids, being aware that you can have the 529 plans and all that. That way, when your kids go to college, you have everything's planned out. That's the thing, planning things out.
Yeah.
Planning for retirement, planning for the kids, just having goals,
Yeah, written goals are huge, dude.
Yeah.
I think, like, I read the statistics. I thought that was insane. It was that 2% of, like, the entire U.S. population, the entire global population, 2% of people write down their goals. And of the people from this survey I read, of all the people on the world that actually accomplished their goals, 98% of them came from that 2% that wrote them down. So in other words, about 2% of the population accomplishes almost all of the goals set by the population. And it's almost solely because it's a huge, like, massive part of just writing it down.
Yeah.
So I've had written goals for like 5-6 years, and it's totally changed my life.
Yeah, writing things down. And I guess, I don't know if every goal works out. Do you have like a timeline with the goals?
You have timeline, there's like long-term goals, and then medium-term goals. So like, writing books and stuff would be like medium-term goals, and then I'd have like deadlines. Yeah. And deadlines are huge. What's up?
So yeah, you have deadlines and all that. What about like meditation?
Dude, that's huge.
I've always wondered, is that a big thing, in
for me,
accomplishing success? Yeah.
Like, especially with trading. People, like, they approach me, and they're like, I tell them I trade stocks. I'm like, oh, isn't that stressful? And I'm like, do you think it's stressful?
I don't think so.
I don't think so.
You spend an hour,
a couple
2 hours a day, and then you go enjoy your day.
Yeah.
I mean, like, so trading, you're not sitting there behind a computer all day worried about it. You trade your stocks, you learn from them, and then you go enjoy your day.
Yeah.
Go to the gym. Don't let it overtake everything. You want to still, that's the thing, You trade 9 to noon, then you have the rest of your day.
Yeah.
To do what you want.
Dude, I remember I was in this huge trading competition, and like I was losing by a little bit, and so on the first day my account got frozen when I was investing in the stock that doubled, and so I didn't get any of the gains, and I was like super pissed. And so the next day I went against like all my rules, and I decided to trade until like the closing bell at 4:00, and dude, I got screwed over on that last day, and I lost a ton of money because I wasn't doing I was working too much. And I think if you put in, like, you've got to care, but not like that much. Like, you have to just kind of chill out and relax. I think meditation helps with that. It kind of helps you relax and not care that much, and like be willing to just walk away once most of because like 80% of the money has been made by like 11 o'clock, 12 o'clock.
And that that happened 2 weeks ago. So I did 2 or 3 day trades, was up maybe 10-20%. And then I was like, I got to do one more trade. Then I'll be done for the day. And I screwed up on that trade. And it was about 12 o'clock. So, just take your profits and
trades get
stand up from the computer and leave.
Yeah.
So, you're not going to make 100% every trade. And that's the thing. Don't sit there and think you are, You
just take the money. Like, money is money.
Yeah. So, that's a big thing that I learned from that day.
That's smart.
Be happy,
Yeah.
I don't think you're gonna, because it's not easy to do. These are well researched setups that you look at, and I think I get up a lot earlier. You don't just start at 9:30.
Oh yeah,
that's another thing. You can't just it's 9 to noon trading, but you're working more than that 3 hours. You know, you probably wake up. What time do you wake up?
4?
Yeah, 4. So you can do a lot of research before the market opens, looking back at, like 5-day charts.
Wow.
Seeing like support and resistances,
Dude,
And
that's really interesting. Because I have a lot of people that trade with just like you. And they do the same thing. They wake up early. When do you wake up?
I would say I wake up 5, 6 a.m.
5, 6, and when you look at stocks?
Well, I think getting a good breakfast is a big point.
Breakfast in the first 5 minutes of waking up.
Yeah, breakfast and I don't trade in my pajamas. I have to feel good. You don't just go straight from the bed to the computer.
Yeah.
I think get a shower. You need to feel good, be in the right mindset. If you're trading on an empty stomach, you're gonna perform bad. It's like a football game, any sport.
Any sport, man. You don't treat yourself like an athlete.
Yeah. It's there's definitely a lot that goes into it, but yeah, I get started. Maybe I do an hour and a half. It depends if I'm active trading, not as long. But if I'm gonna trade long term, or even swing, I would say swing trading. Yeah, that's when I kind of do more research on the news and stuff.
Yeah.
Which I think it would be because we live on the East Coast. Market opens at 9:30. I would think it'd be cool to live like out west, where you can start trading at 6:30 a.m.
6:30 a.m.
You get up at 3, you're done by like 9:30.
Dude, holy crap.
Can you imagine that?
I know people that live in Las Vegas. They wake just like you at 3 o'clock in the morning.
Yeah.
And then they just, It's
amazing.
It's really
Can you imagine starting at 6:30 trading?
It'd be so nice.
When it's dark outside.
Yeah.
You're done when your family wakes up.
Yeah.
You can go.
And everyone's like going to work and you're like, I'm done.
You can go golfing. You can do whatever you want that day with your family. It's great. I would say what time does the average person wake up in the U.S.?
I think maybe 10 o'clock.
On
the weekend when they don't work.
10 o'clock, exactly, yeah.
And it's like, dude, the market's been open. Like,
You're
what
done.
are you doing? You're done.
Yeah, you're done when they wake up. I think, so, I don't know. It just seems cool considering we've always lived out here where it's 9:30,
I mean, you can do it anywhere,
Yeah.
You go across the world, start trading at like 6 or 7 o'clock at night.
Yeah. So...
You just need a computer and the internet.
Yeah, it's a lot easier than it used to be. You used to have to call it in or drive up to the... I still know people that call in, and it's $30 a trade.
Really?
Yeah, I still know a good bit that do that.
That's crazy.
And it's just, they're more, I don't know, back then I think they're not really worried about, day trading and stuff. You get to a point where you don't need to do that. I think.
Yeah.
When you're...
You mean like, what do you mean?
When you're 60 or 70 years old and you've already got so much money, you can put it in something that's going to earn, you're not having much risk, so you can earn 4 or 5%. But when you have millions of dollars, 4%, man.
Yeah, you just live on.
Yeah, you just live on the dividend or whatever.
Yeah.
So.
And then you don't have to work like ever.
Yeah, exactly.
And that's like kind of the power of financial markets because it is pretty crazy.
Yeah. So you go through kind of a cycles. Everything changes, Who knows what's going to happen with brokerages and all that in 20 years? Who knows,
Dude, it'd be so crazy. I think right now is a really important time because you have, like, so many of these brokerages that are finally, like, lowering all their costs. Because I remember I started, it was, like, I don't know, $5 trade. And I thought that was a lot. But then I talked to my dad about it. And it was, like, $100 a trade, like, in 1990. And so now that, like, the barriers to entry are so much lower fundamentally, at least, like, in terms of fees.
Yeah.
You have so many more people trading, and all that does is increase volatility and make it easier to make money. So it's like this compounding growth curve where you have more people making more money, letting more people make more money.
Yeah, and I mean, just the way the platforms are now. What is it? It's a day and age where people love, looking at like animated things and stuff on computers. If I would say majority of people, even trading on your phone. Everyone's got a phone, smartphone. Yeah. You can literally trade off your phone.
They have people that literally just do that,
Yeah, and you can make so much money doing that, which is great. There's no cost to open up a brokerage account. So, it's fun, What we built, I built my computer, 2 years ago?
Yeah.
And I trade on it every day, so.
That's so cool.
I only use it for trading. I don't, just build it for that. That's another thing, like managing your time throughout the day.
Yeah.
You have 24 hours and I walk in my dorm room at school and all the kids, they're playing Xbox all the time and stuff. And you just have priorities, You want to play Xbox or do you want to go to sleep and be prepared for the morning,
Yeah.
And be more productive when you trade, so. I don't know. You can't be like everyone else.
Yeah, no, 100%.
Yeah.
Yeah, because most people will do like the wrong thing.
Yeah. You have to be different.
Yeah.
Even though people might think you're weird or not. I mean, give it 20 years when you're, they're working 40 hours a week and you're sitting back and people working for you, they'd be wishing they were, investing in stuff at our age.
Because, I mean, you can have that at any time in your life you want. Like, if you want to have that growth, like, it all just comes down to making the investments. It doesn't matter, like, when you start.
Yeah.
But it's just investments plus time.
Yeah. Time is a big factor.
Yeah.
So, but yeah, it's treated me well, and I definitely enjoy investing. I wouldn't enjoy sitting behind a computer for 7 hours a day trading.
Yeah, no, yeah.
So, that's a good thing about it. It's kind of like, you do it when you want. You're not forced to go into work 40 hours a week. So,
you just pull up a laptop.
Yeah, pull it up and you're good to go. So, yeah.
I don't know. Are you good at laptop trading?
I've gotten to where I can do it.
You can do it?
I don't even trade with hotkeys at home.
Yeah.
So,
I mean, Thinkorswim makes it so easy. You just click.
Yeah, you just click. But some people, have their keyboards all set up.
Some people do.
One button.
Mostly, what's that?
Yeah, you can make 60% without doing all that.
Yeah.
So, maybe we'll get to that someday.
Yeah.
I mean, yeah, I've only traded for like 5 years, so just keep learning new stuff every day.
Mm-hmm. That makes sense.
Mm-hmm.
Hopefully the platforms keep getting better and better to the point where, like, you don't need hotkeys anymore.
Mm-hmm.
Because with the older platforms, you needed all this complicated stuff to start investing.
Yeah.
But now it's, like, super sweet. So that's cool, man.
Yep. But, yeah. So, just keep investing, right?
Yeah.
It's fun to watch your money grow.
It is sweet.
Yeah.
And I think it grows a whole lot faster when you do it with other people.
I think so, too, yeah. You have to collaborate with a lot of people. And at our age, there's not many people that do it, so most likely the ones that are into it, they're successful at it. Yeah, they're good at it.
Yeah.
So, I think, yeah, it's cool, man. You see someone trading stocks, you go up and you start talking to them and you start trading with them. They know something you don't, probably.
Yeah, dude, so true. That's insanely, yeah.
Yeah.
People are smart, for sure.
Exactly.
Do you have, like, an investment club thing at Charlotte?
Yeah, we, I think, it's called Investment Club, and I saw it on the UNCC page, and it's every 2 weeks, we went to it, me and a buddy, and the first day they had these introductions, introduce your name, and then everyone is doing that, and they're like, yeah, I'm here, but I don't know anything about stocks or anything. So, I mean, yeah, there was, I would say, 15 people there, out of a school with 30,000.
It's insane.
And these are like finance majors and all this too. So, yeah, there's a few out there that actually enjoy trading.
So, like, when you go, did you go to, like, those meetings?
Yeah, every 2 weeks we have meetings.
And did you get a lot of value out of that?
I would say that, it was kind of like a rerun of your stock classes and all.
Oh, it was like classes?
It was, they would have like a presentation up, kind of like what you used to do.
Uh-huh.
And it was different. It was not teaching about fundamentals and technicals. It was like talking about like the news, what's going on with stocks. I would say no.
No. Didn't. So you learned about news?
Yeah, we learned about news, like
that's crazy,
what's going on
man.
with the markets and all.
I think that might be what a lot of people like think about when they think of the stock market as like CNN or CNBC or whatever, and like what's on the news.
Yeah.
But like in reality, all that does is maybe move indices.
Mm-hmm.
But for individual positions, it's like
yeah, we didn't learn anything about technical analysis.
So you guys didn't make any investments?
No.
That's interesting. I know, like, I've been to probably 4 or 5 like groups where like collectively they invest as a group, where they try to learn about investing. At Tech, they have this one club, and they do every week. They manage $1.5 million, and you go through this process, application stuff, and I'm going through it right now to help. They do like $40,000 positions based off of people that give like a presentation pitch.
Yep.
And it's it's interesting because you meet new people and you learn new things, but like most of the investments, actually, frankly, like all the investments they make are in like, Apple or like these huge companies. They're gonna have like Apple's been crushing it. Like, don't, I'm not gonna say like Apple stock's not doing crazy, but it's like the most like obvious investments like ever, and you don't get like any of those really really good investments because most of the people there like have literally never traded a stock, and they're telling this committee what they should invest in, which I think it's insane. So I think like when you're trying to find people to invest with, like it's really critical that they're not like just trying to like learn at the beginning stage. If they are, like they learn it the right way, and they're not just trying to like work at a bank or manage like other people's cash in like crap invest. Because dude, you lose $40,000 of money that's not yours, like you don't care. I think like one of the biggest things is like find people that are actually doing it, and then surrounding yourself people that are like actually doing it.
Yeah, I'm glad you mentioned that. Actually, in the investment club, they had Northwestern Mutual came in and talked to us. They're trying to get us to do an internship. Where we're like an investment advisor.
Yeah,
and that was kind of what the meeting was, all about that. And yeah, so
you could be an investment advisor.
Yeah. So they're like, yeah, we'll give you your Series 6 license and all this. And, yeah, some people love to do that, but I don't know. We'll see.
Right.
Yeah. If you're really good at managing your money yourself,
you
just do that. You don't have to, you can be, I don't know. Like, we were talking about that when you have all these licenses.
Yeah.
I mean,
the thing that sucks is you have to, like, go and work at this giant Wall Street firm. You have to have all this regulation, all these licenses. I mean, the money management market in particular is just like insanely centralized. And so because it's only like the really big players, like most people aren't going to just give their money to Joe Schmo. They want to give it to like TD Ameritrade, and TD is going to take like 75% of their profits or crap like that. And so like you have this money management space where people are getting screwed over and investors are losing literally billions of dollars in a $1 trillion industry, because these advisors don't really, like, no one is going to manage your money as well as you in most cases. Most of the investment advisors are just trying to have like conservative growth to keep their jobs, so they don't want to get fired, and they get paid like a 6-figure salary, and like that's it, and they just want to keep their jobs.
Yeah, there's definitely, not everyone's going to be in, to investing themselves, so.
And grow.
Yeah. So, there's plenty of jobs out here. They have whatever you want to do. Not everyone's going to want to sit on a day trade,
Yeah.
There's different ways to get to your goals of whatever you want it to be when you retire or whatever, so.
I mean, I think probably the biggest thing is just having assets.
Yeah, having assets. And sad, most people don't.
That's what crushes them, man.
Yeah. I mean, most people have a house and a car, but
are those really assets if they like cost you money every week?
Yeah, you could argue maybe a house, but I don't know. If you're, I don't know. I'm not real big into real estate. I haven't got real big into real estate, so.
Yeah, me neither.
Yeah.
You can't even do it when it's just.
Yeah.
It's so tough.
But
it's so much, because you make like what, 50% on a house.
I don't even think it's that much.
You don't think it's that much?
No.
I feel like I don't know.
Maybe, yeah.
But you can do that in like one day with stocks.
Yeah. It's hard to sell one house a day.
Right.
So.
I think, stock market's probably one of the easiest ways.
Yeah. And then you can always start that if you want. You always have, stocks in your back pocket.
Yeah, I mean, you only work a couple hours a day. You can do whatever you want.
Real estate in a 12 to 6 every day. I mean.
Yeah.
Most of your guys that are really rich, they do more than just trading, probably.
Yeah, a lot of it's like businesses. So I spend a lot of my time outside of trading doing businesses. When you're talking about waking up early to look at stocks, I thought that was interesting because I got like a lot of people I trade with, and they'll do the same thing. But like what I found is like I've done that before, especially for swing trades. And I think it works really, really well for swing trades. But for like looking at the stocks you're gonna trade for the day, like I'll like intentionally restrict myself to looking at like the scanners and the gainers and charting them out until 9 o'clock, because like frankly, half an hour is pretty much enough time in 99% of circumstances to look at like the 9 to noon stocks.
Yeah.
And anything outside of that is just like swing trading.
Yeah, swing trading, you want to have a little bit more time. But like you said, day trading, yeah, you don't even care what the company does.
Yeah.
It doesn't take that long to look at a chart.
So you can kind of spend like that time in the morning, that time in the afternoon, after you work out or whatever. Like for me, like I'm spending a lot of my time right now just like building a business asset. And so I think it's cool that like you can, do your lawn stuff or really anything you're passionate about.
Yeah.
Or, if you make enough money, you don't even have to work. You can just go on the beach, doesn't matter.
Yeah. It's great, yep. Assets, investing, it's all good.
That's so cool.
Yeah.
Sweet. Thanks, Jake.
Yep.
You're killing
Always
man.
good with you, John. Thanks
That's
so
awesome
much.
stuff, you bet. Do you have any last resources you think someone starting out might need?
Yeah, I think, read 9 to Noon.
Yeah.
Well, easy to get on Amazon. Easy read for anybody. All your classes that you do, obviously. Just be willing to do some research. I would say get the book for sure. 9 to Noon, guys.
That's sick, man. You're the best, Jake. Appreciate it, man.
Thanks, John.
You bet. Awesome.
Want more stock market secrets? If so, you'll get your free copy of my best-selling book, 9 to Noon. You get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% daily.